Hi traders, you are welcome back to the Forex Geek channel. In this video, we are going to be diving into a Bollinger Band strategy that actually works. Okay, if you've ever struggled with market volatility or had a hard time identifying key entry and exit points, then this video is exactly what you need. Okay, Bollinger Bands are one of the most widely used indicators in technical analysis, but knowing how to use them effectively can be the difference between a successful trade and a missed opportunity. So by the end of this video, you'll learn proven strategies that can help you identify overbought and oversold conditions, okay? Breakout opportunities and market trends. Now, these strategies work across all markets, including Forex, stocks, and crypto. So no matter what you trade, these tips will be beneficial. But before we get started, make sure to hit that like button and subscribe to the channel if you have not done that already, okay? We post new trading content regularly, so you wouldn't want to miss this, okay? Let us jump right into it. Now, first things first, let us quickly recap what Bollinger Bands actually are. Developed by John Bollinger, this indicator consists of three components. I'm just going to add indicator right to the chart. So we can say that the indicator consists of three components. The middle band is a simple moving average that is typically set to 20 periods. As you can see from the default settings, it is set to 20 period. Okay, then we have the upper band. The upper band is created by adding two standard deviations. As we can see, that the setting is also defaultly set to 2. The default setting for the deviations is 2, right? So or based on default, the upper band is created by adding two standard deviations to the middle band. Then the lower band is now the band that is created by subtracting two standard deviations from the middle band. Okay, so why do traders use Bollinger Bands? The idea is that when the price moves closer to the upper band, the market is potentially overbought, and when it moves toward the lower band, the market might be oversold. So the bands themselves expand and contract, based on volatility, making them a great tool to spot market conditions. All right. Now, one of the most effective Bollinger Band strategies is the volatility breakout strategy. Okay, this strategy is based on the idea that when the bands narrow, okay, we can see like what's happening here. When the bands narrow, it signals that the market is in a period of low volatility. Then when the price breaks out of the narrow range, it often leads to a significant move. Okay, so here's how you can use this strategy. You identify the squeeze first of all, right? You look for periods where the price is bouncing within the narrower range between the upper and the lower bands, right? So this indicates that the market is consolidating. Then you wait for the breakout. When the price breaks above the upper band or below the lower band, it signals that volatility is returning. So you can enter the trade in the direction of the breakout. Always set your stop loss, all right? To manage risk, set your stop loss just inside the bands and aim for a risk to reward ratio of at least 1 to 2. If you're risking $1, you should be targeting at least $2, okay? Now, this strategy works especially well when you are in a market with low volatility but expect a breakout to occur, like during news events or market reactions to key economic data. All right. Now, another powerful strategy is using Bollinger Bands for reversal trading. All right. You can use Bollinger Bands for reversal trading. Okay. When the price moves toward the upper or the lower band and starts to reverse, this could indicate that the market is overbought or oversold and is likely to change direction. So here's how to implement this strategy. You wait for price to reach the upper band or the lower band. All right. The price should touch or move slightly beyond the band. Okay, it should actually touch it and move beyond it. All right, for example, you can see what happened here. You can see what happened is you should actually touch it and move beyond it slightly. Okay, then after that, this signals that the market might be ready to reverse. So you confirm it with indicators after that. Okay, to reduce the risk of false signals, you can confirm with other technical indicators, for example the RSI or maybe MACD or any other indicator of your choice. Okay, to confirm that the market is overbought, right? You can see, to confirm that it's actually overbought or oversold, as the case may be. Then you enter your trade. If the reversal signal is confirmed, take the trade in the opposite direction of the trend. Okay, for example, if the price has reached the upper band and starts reversing, you might consider selling. Okay, so this strategy can be effective when the market is in overbought or oversold conditions and you are looking to capitalize on price corrections. Now, while Bollinger Bands are often useful, or rather are often used to spot reversals, they can also be extremely useful for trend following. All right, Bollinger Bands also come in very handy for trend following strategies. Okay, so when the market is trending, for example, we can see what's happening here. When the market is trending, you can use Bollinger Bands to stay in the trend until it shows signs of reversal. So here's how to use Bollinger Bands for trend following. First of all, you have to identify the trend. All right, you have to identify the trend. So you start by determining whether the market is in an uptrend or a downtrend. All right, in an uptrend, the price consistently bounces off the middle band. Okay, you can see the price consistently bounces off the middle band. Um, while in the downtrend, the price consistently stays below or bounces below the middle band. Okay, then you wait for the pullback. In a strong trend, the price will often pull back toward the middle band before continuing in the direction of the trend. So this is where you want to look for your entry. Okay, look for an entry point when you're getting a confirmation signal around the middle band. All right, then you enter on the bounce. When the price touches the middle band and starts moving back in the direction of the trend, it's a signal to enter. So for an uptrend, you can wait for the price to bounce off the middle band and continue upwards. For a downtrend, wait for the price to bounce off the middle band and continue downwards. Okay, then you set your stop loss. All right, place your stop loss appropriately below the recent swing low for an uptrend or above the recent swing high for a downtrend. So using this strategy, you can catch trends early and ride them for longer periods while still protecting yourself with appropriate stop loss placements. Okay, so now while Bollinger Bands are a powerful tool on their own, combining them with other indicators can give you a better edge in the market. For example, combining it with the relative strength index, right? You can combine Bollinger Bands with RSI to identify overbought and oversold conditions. Okay, if the price touches the upper band and the RSI shows an overbought condition, it's a strong signal that a reversal might happen. Okay, it's a strong signal that a reversal might happen. Then you can also combine with the moving averages, right? You can use moving averages to confirm the trend direction. If the price is above the 50 period moving average, if the price is above the 50 period moving average, it's more likely that the trend is bullish and you want to focus on buying opportunities. Okay, while if the price is below the moving average, it's a bearish trend and you want to focus on sell opportunities. So by combining these indicators, you'll have more confidence in your trades and you'll be able to make more informed trading decisions. All right, so there you have it. These are just a few of the Bollinger Band strategies that actually work in real market conditions. Okay, from volatility breakout to trend following, Bollinger Bands can give you a clearer picture of market behavior and help you make more confident trading decisions. Okay, so if you found this video useful, don't forget to give it a thumbs up and hit the subscribe button for more trading tips and strategies. And as always, take your time to practice these strategies on demo accounts before applying them to live trades. Okay, thank you for watching, and I'll see you in the next video.